you at Cbonds online seminar. So my name is Lana Veselova. I'm International Partnership Manager at Cbonds. I would say I love finding some perfect data solutions for the companies worldwide in order to make thoughtful market analysis. And today it's a great pleasure to host this seminar, which will be devoted to finding opportunities in terms of the European market space. But this seminar would be absolutely peculiar because we have wonderful experts who will share their point of view in terms of efficient risk analysis. So we'll try to make the bond market screening with the more thoughtful and comprehensive overview of the current markets. So today we'll dive into the world of government and corporate bonds in European markets. And let me introduce our amazing speakers who decided to spend this day with you. So Snezhana Popovska, she's the president of SEEMT Association, also the head of trading unit at TTK Banka. And we also have Alexey Ilyin today with the I would say 20-year experience, institutional account director at Exante, which is gives us very thoughtful risk analysis approach today. So thank you very much for joining. And today we'll try to have a look at the market. So I would say we are already in Q4. So this year was pretty juicy in terms of bond investments and still is. So finally, our investors find very appealing bond market opportunities in terms of European bonds as well as US-denominated bonds. But this seminar, we decided to focus on this particular trend. So let's make the overview of the markets with the current trends, with the possibilities that you see. So today I will make some intro, what kind of the most market opportunities you can find with our bond screener, while our speakers will share their insights in terms of more thoughtful analysis and I would say more complex approach. So let me start our presentation, and later on, we'll have Snezhana and Alexey sharing their views. So let me give you some background also in terms of Cbonds. So we are a data aggregator, and we provide very comprehensive coverage in terms of bond analysis. We also cover some other instruments, but I would say the bonds is the heart of Cbonds. So we cover 800,000 bonds. So no matter which country you're fan of, you will be able to get 100% coverage of international bonds, which are, I would say, more liquid, more tradable, and more preferable among the investors. But domestic markets is also very important, especially for European markets. I believe that would be the majority, which we'll discuss today. So here we cover also 80,000 stocks, 9,000 ETFs, 50,000 indices, which will give you many-sided opinion on the market trends. So among our audience, there are different institutions, but I would say the key focus is on family offices, asset management companies, banks, and depending on the peculiarity of the market. So for example, in Italy, we have private financial consultants, some audit companies which make the bond market obvious, and of course we support private investors in terms of data solutions. Our clients are located in 80 countries worldwide, but I would say the majority of them, we have kind of like the key focuses are in Italy, in UK, in Switzerland, in UAE, as our headquarters is here, and in US. So today I will make some overview how you can find and how you can basically find very interesting bond market opportunities with our different tools. So among our top tools, there are multifunctional bond search, with the help of which we'll try to see the most interesting corporate and sovereign bonds, the watchlist tool, which allows to stay updated in terms of the markets, Exante tool, which allows to monitor your portfolio in the most efficient way. And of course, there are several ways how you can find the data. So this is a web-based solution. So no need, you can stay remote, you can lay on the beach and use our mobile app. And of course, we provide also API data solutions in a structured way. So as you can see, there are several features which will help you to find bonds. So you will be able to work with our tools in a very convenient way, with the possibility to export the data in Excel, visualize bonds on the market map, and maybe receive some notifications. With the watch list, you will be able to get automatic updates in terms of price, yield changes, email alerts, and basically see the price yield changes for all your bonds. The Exante tool allows you to create your own files. For example, you can create portfolio in the way you prefer and get prices, yields, and some other information updated via formulas, as well as the mobile app, which probably the easiest way how you can quickly find the information within a few clicks. I wanted to highlight also the way we work, because nowadays the personal approach really matters in our modern world. When you get so many services, you need to feel yourself as a human being when you especially need a bond data solution. So at first, we have a wonderful team and support team who will always study all your activities and main goals as the way to understand what is, I would say, the key problem to solve. We'll introduce you the most relevant tools which will perfectly cover all your needs. You will be able to test our tool within trial access without any commitment. And once you're satisfied and see that this is actually, this tool helps you to find all the data you need within a click without wasting time and surfing internet, we'll be happy to find the best subscription solution for you, so you could enjoy using it. And more or less, within all your period working with us, you'll have full support. Our managers will contact you and provide all the answers, all the webinars in order for you to make the most of our platform. So you see my contact details, and the head of our department, Alessandro Lombardo, he's responsible, I would say, for all our international development, and of course, as he's Italian, the Italian market, and I deal with corporate clients all around the world. But let's start with the particularly practical approach, and we'll see how we can find bonds according to different parameters. So You see the Cbonds platform. This is we have different tools, but let's start with our heart of Cbonds. This is a bond screener, which will help you to find bonds according to your particular parameters. As you can see, there are so many filters you can apply according to the yield, rating, duration, maybe some particular date that you would like. The rating for the issue and for the issue, you can see the type of the bonds you want to follow or you can exclude from your research. You can search according to the minimum settlement amount or the volume of the issue or the price, for example, how it is traded. And the coupon, whether it is fixed or floating. So let's make the overview of the sovereign European markets as of now, what kind of trends we have. So let's put in euro and with the yield starting from 3% up to, well, more or less, I would say 8. Let's start with the mid duration for 2 and 10 years. And the rating starting from WB+. So this is, I would say, your first step in the market analysis, how you can monitor all the markets depending on your preferences. So we found 84 positions. You can export the data in Excel. And now let's visualize the yield map. Basically, that's how we see also North Macedonia here at the top. So let's add the benchmark in terms of euro and see where these bonds are corresponding at our scale. You can enlarge the chart and see which ones in that particular duration that is interesting for you. So let's check also some long-term duration. Today we'll also have the discussion in terms of which duration is more interesting as of now. And on the scale of 10, 30 years, there are also very interesting market opportunities, which I really wanted to share with you today. And I'm thrilled to get your opinion because some of the bonds have just amazing prices. And now let's start with the corporate bonds. So you can filter according to your particular industry that you want. So let's just put in euro with the yield starting from 3% up to 8. With some mid duration, but here I want to have the rating starting from BBB, so we'll have just investment rate. It would be more secure, and with a fixed rate starting from 4%. So if you want to export the data in Excel, and then let's just visualize what kind of possibilities we have right here. So as you can see, Eurospace is now also already far from 2-3% as it was before. Here you will be able to find some more interesting opportunities. If you want to follow such query pretty often, just save your query and then you can see the updates on your preferences. So maybe new bonds which match all your criteria. Let's compare two issuers and just see Volkswagen and Renault. What kind of two issuers can give us in euro? And if you want to limit just with the liquid bonds, just put 1% yield. So just according to the scale, as you can see at the top, we'll see just perpetual bonds. So these are the corresponding two issuers in the same segment, which are now in 4-7% space. So if you click on the dot, you will find that particular bond, and you will be able to study all the data about this. So we operate as a data aggregator, and here you can get all the data from primary sources at a single page. You can see the type of the bond, the latest ratings, the current call option in case it is available. You can use our calculator in order to calculate some parameters, and we'll revert to this. The prospectuses, they have all the terms. So this is one of the most unique prospectus database. So now we seeing the price dynamics for this bond with a 3-year scale. The yield is pretty much high, and the T-spread, as you can see here, we aggregate the quotes from 350 pricing sources. These are stock exchanges and OTC market participants. So in green, you can see intraday quotes from German stock exchanges. And I would say the most important thing is to analyze the price dynamics within years. So here we have the historical depth for 5-10 years for corporates, and for sovereigns it can be up to 30 years. So make sure that you are able to retrieve all the parameters with the benchmarks, with the spreads, and analyze how this bond is dynamic in terms of the price. You see all the cash flow, all the terms in terms of the coupon, the call options, the initial information about the placement, identifiers, ratings for issuer, issue, and SPV, the current and the historical one, of course, from Moody's, Fitch, and the S&P, and from some local, around 70 rating agencies. You can see the list of institutional holders. It shows the appetite of the market as well. In case the company is public, you will see the financial reports and maybe some related entities there. Connections between the companies, it is very interesting to see. We have at the issuer page where you can visualize their depth in different currency. In case the company is having stocks, so you can see the performance, I would say, in full. You can see the debt breakdown in different currency. And of course, all the multipliers, financial reports, in case the company is public. So let's take a look at some sovereign bonds, which are now giving absolutely interesting yields. And especially, as you can see, there are some bonds which were traded around 100, and now they are traded at half price. Although you see that the dynamics and the volume of the liquidity is very nice. These opportunities are very interesting, even on the long-term side. This is one of the bonds from Austria, which just recently found with our bond screener. It has a long, very duration, but I would say it was started trading at 130, and now it's almost 40. Just imagine what yields you can get afterwards while it will grow. So as you can see, there are so many quotes from market participants and stock exchanges. So let's compare two bonds and see basically on the chart the difference between Austria and Italy in green. So you can see there probably in shorter duration the difference between the prices, the yields, and you can see also the spread between two bonds. And switch to T-spread. Our colleagues will comment also some work with the chat afterwards, but let's take a quick look on this part as well. So if you like the bonds, you simply click on the star and we'll be able to add them into the watch list. You can receive notifications automatically in terms of coupon payments, call options, changes of ratings, new financial statements, and my favorite is the price yield triggers. So you can put your price and make sure that you're buying at the very best price once it hits a certain level. You're able to track not only bonds, but stocks and indices. Let's take a look, for example, this sovereign index for CE market. It will just give us some perspective how it is moving. So you can see below also the list of bonds which are included in this index. It could be flexible, actually, according to our parameters. And in terms of efficient portfolio management, we recommend to use Exante because it will give you the full freedom in order to make some additional calculations with the help of not only our formulas, but also some Excel capabilities. So you can have self-updated files in your computer. So, for example, this is the file which is made out of formulas. You can see that you can track bonds, stocks. It's just a part of formulas that you can use. So you can just apply to the whole row, and then all the data will be updated automatically. As well, we also have some template files for indices. So we'll check today also sovereign trends for US, for Europe, and that's how you can basically update all the data. So feel free to ask. We'll share our contact details in the chat, and make your bond market screening in the most efficient way. Thank you very much for listening. And now I would like to pass the floor to Snezhana Popovska. Snezhana has unique skills in terms of technical analysis, and were very kind in order to share her own insights in terms of how it should be performed in the most efficient way. And of course, we'll make some probably discussion in terms of outlook. So what we should expect afterwards. In case you will have some questions to our speakers, feel free to leave them in the chat, and we'll discuss the most interesting ones afterwards, after our discussion. So, Snezhana, thank you so much for your patience. I'm passing the floor.
Before we start, I would like to say just a few words about the SEEMT Association. We have established SEEMT is the Regional Association for Technical Analysis. We have established the association this year. We are a member of the SEEMT Association, and our goal is to improve the investment decisions by investment professionals and to open career opportunities for our members. We are providing education and training. We promote research and innovation. We are fostering a community of technical analysts, and we are advocating for the profession. I wouldn't go into details about the association. Today, we're going to look at the charts and what the charts tell us about the opportunities and risks that lie ahead of the bond market. Before we start doing the presentation, I would like to add a disclaimer that everything that is in the presentation is only for informational purposes and educational purposes only. So you should always bear in mind that if you want to make any kind of investment decision, that you should have a consultation with your investment advisor or your colleagues. Okay, so first, I would like to point out a few points why and how can technical analysts be a valuable tool and help investment professionals in the bond market to gain insights and to make informed and better investment decisions. First, by identifying price trends and patterns, they can help make informed decisions about buying and selling bonds based on the direction of the market. They can time their trades effectively by analyzing historical price movements and patterns, and they can identify optimal entry and exit points. They can also assess the level of risk by analyzing the volatility and using investment tools, so they can make informed decisions about the risk management strategy. They can gauge market sentiment and investment behavior of the participants, and this can tell them whether the market is in a bearish or in a bullish trend. And also by identifying support and resistance levels, the market participants can identify turning points on the market. So whether we are institutional or retail traders, we all want to answer the same questions, and that is where we are in the market. We want to know if this is a correction or reversal. Is this the peak? How long it will go? Is this the bottom? But I'm sorry. Before we answer this question, we all should know what is our time horizon. So for any investor or trader, the time horizon is different. So the short-term trader, it can be minutes or hours, and the long-term investor is looking for months and years ahead. Without knowing the time frame, we cannot make the right analysis. Because according to the Dow theory, we have primary, secondary, and minor trends, meaning that the trend can be simultaneous. The trend can be in upward and a downward direction based on the time frame that we are looking at. So unless we have all-time new highs or all-time new lows, depending on the time frame that we are watching, we're gonna have bullish and bearish market outlook. So this is very important. That's why I wanted to point out. Now I will start with the analysis. This is very interesting chart that I wanted to share with you. This is a price chart of the UST note, and the price goes back nearly 40 years. And we have drawn regression lines. So here we can see that the bullish trend has been broken, meaning that for the last 4 years, we were in a bull trend. And the last price is telling us that this trend is broken, so we should not avoid this chart, and meaning that we can expect lower prices on the US Treasury notes. If you look at the yield chart, we can see that we are still in a bullish trend. Before explain what we how we are seeing the chart, for this purpose I was using cloud charts, Ichimoku cloud charts. So this is a Japanese technique, and it means at one look, so no matter what time frame we are using, the simple rule is that as long as the price is above the cloud, we are in an uptrend, and if the price is below the cloud, we're in a downtrend. So on each time frame we can use the same approach, and we don't have to do any adjustments. So here is the weekly chart of the 10 years US yield, and we can see that we are still in a bullish trend. So the price has reached the target of 5%, and this is a very psychological level. So I assume it will take times, like we are speaking a chart for the next coming months and years, so probably it will take time to break it higher. But as long as we are above the cloud, we can still say that we are in a bullish trend, and that we can expect a higher yield. If we go on a lower time frame, probably we're going to see that the trend is bearish, but these are the levels to watch. So unless, according to the Dow theory, unless we have lower low and lower high, we cannot say that the trend has changed and that now we are in a bearish mode. So if we start with the European government bonds, first let's take a look at the Euro 10-year government bond. We can see that there is a high positive correlation between the bond markets. So more or less the picture is the same everywhere. We are in a bullish month, in a bullish trend on the weekly charts. And but if we go on a lower time frame, we can see that on the daily we are in a bearish trend, and even on an hourly chart we are in a bearish trend. So how we use the technical analysis? We see that, for instance, I use some kind of indicators, because we see that on the daily chart, we have the price made some retracement, but wasn't able to make a new higher, so it can stay in the uptrend. And using the MACD indicator in this case, we can see that there is the signal line is already giving us signal that the trend is exhausted and that we can expect reversal. On the short time frame, we are also bearish, so we can see that there are a lot of potential to the downside. But still, if we are looking on the long-term trend, I would say that the chart are still telling us that we are in a bullish mode and we can expect higher yields. So the yields, we have the same situation on the long term. On the if you look on the weekly chart, meaning that we are looking upfront in the next coming months, we can say that we are in a bullish mode. Still, here I was using the RSI indicator just to see when we have turning points and how we can use the negative divergence that is happening, meaning that here the price is losing its strength and that it can it's gonna make a reversal. And we can also see the same thing is happening on the Italy government bonds. More or less the picture is the same. So now the question is how we should position ourselves. So basically, we always say that trend is your friend, meaning that we don't want to trade counter the trends. So if we want to position, I mean, currently that the market, the charts are telling us that the market are sideways. So we would suggest to have a confirmation on the lower chart time frames, so we can open a long position, or to wait to see if the market will hold these levels, or it will make new low, so it can so we can change the position and we can start thinking about that maybe the interest yields will go in a lower territory. Basically, this is my presentation for today. I didn't want to go into details. I try to keep it simple. The simple, the better. So in order to have uptrend, we need to see new highs. And if the price breaks below, we can change our position and we can think about moving to lower yields.
Thank you very much, Snezhana. Yeah. Thank you for the interesting approach, how we need to analyze the charts as well, because this is very important how you read it and how you can maybe predict whether it goes up or down. All right, then let's move to Alexey's presentation, and afterwards we'll check if we have some questions and we'll make some discussion.
First of all, I would like to thank the organizers, SEEMT Association and Cbonds, for opportunity to speak here, because what I would like to give to you now, of course, I cannot give you some particular ideas, investment ones, but I would like to share with you very interesting approach regarding the calculations, the risks that will help you actually to to navigate through fast-paced environment we have around us now. And Exante and Cbonds, I'm pretty sure, can help you with this opportunity. So let's try to think on some of them at least, and try to benefit from them if possible. So I mean, I work in financial markets for many years. I speak on some events. I speak as a guest professor in some universities. So now work in Exante as account director and help our clients to to navigate and to hedge, to buy and sell some stocks and Eurobonds. So what I would like to to focus on is four things. Actually, I will try to be brief. Actually, rate surge now. Yes, do we have problems or do we have opportunities? It's very interesting way to think, because as Lana absolutely correctly mentioned in her charts, and Snezhana also mentioned that when yields are higher, then the prices of the bond goes down, so we have better opportunity to buy it. Yeah, because we would like, all of us would like to buy when it's down, you know, at lower price, of course. So how can we benefit on some local markets, and maybe to cover a fixed risk immediately? Because sometimes we can see some opportunities on, you know, on nearby markets, but we don't want to invest in particular bond due to only the fact that it's denominated in another country, in another currency. So we can actually fix it immediately, and we can benefit from that also. I would like to share with you one case on local funding plus cross currency swap that can actually fix some interesting yields, and you know, again, pick up some fruitful opportunities. And I would like to share with you some outlook that is based on Refinitiv and or LSEG group data, actually, that helps to, you know, to understand, maybe potentially understand where rates will be. So again, it's just the outlook, and we can discuss it further because it's slightly different from what previous speaker was talking about, but that's interesting. I mean, in the discussion, truth can emerge, you know. So let's move on. So regarding the screeners, Lana absolutely correctly mentioned the good screeners Cbonds is having. Exante is having also interesting one. So it's an example. It's not constructed in a way of, you know, showing some yield map exactly, but still we have many filters that can help you to navigate through, you know, ratings, maturity, currency, and see and have a look at the market where you can receive particular good coupons, so good yield to maturity. I mean, from particular countries or, you know, bonds. So and actually, where Exante can be on top of all these, you know, screeners, where Exante can be very good at is at particular execution. So when you found some bond and you would like to, you know, to benefit buying it at particular price, you can just, you know, click on the button and you will be there. So that's where we can help. So if you would like, you know, to explore this opportunity, you can. I'm pretty sure you will have my presentation, and you can ping me directly, and I can. But what I would like to focus on actually is Excel, and actually, why I'm talking about Excel when we are in a world of new technologies, etc. Because, you know, old good Excel can help you to be sure of everything when you try to calculate something in Exante, in you know, any other platforms. You but in order for you to be 100% sure that you're absolutely right, and in order to calculate some more stuff, you might be using Excel. And again, if you would like to have these models, I can share it with you directly. You just ping me afterward, and I can send them to you. So what I tried to mention here is the following: that let's suppose we have some bond that have a yield, have a particular price at hand. So some clean price paid is 98.5%, and it has some maturity. Let's say it's 6 months from now. Yeah, first of all, you can very easily calculate yield to maturity. I mean, you can understand where coupon will be paid, what will be discounted cash flow. You can discount it at the yield to maturity, yes, and you can arrive to some figure. I mean, so where you can understand if you invested particular amount of the money, and you will get discounted cash flow from. I mean, it will be the equal to it or not. So that's where yield to maturity is coming from. That's how this calculator should be set to 0 by, if you know this function Excel goal seek, you can very easily get that. But what I would like to focus on is this small tiny part that is below risks analysis, and in terms of DV01. So it's dollar value of 1 basis point of movement of yield curve. So if you will have this bond at hand, yes, it will be crucially to understand if the rates we're talking about will go up or down say, I don't know, 1%. It's big amount, 100 basis points, but still, how much you will lose or gain if this will be the case. So basically, in our case, if the duration of the bond is very small, it's kind of 0.5, yeah, half a year. And if the rates will go 1% up, so having that bond will result in minus $3.7K. So this can be, derived very easily from your own calculations. And moreover, actually, if you would embed here, as previous speakers told, that for example in Cbonds we can embed automatically, dynamically the clean price for the bond into Excel, then you can easily recalculate the risks based in this Excel file. So I mean, it can be so you can achieve online recalculation of your position, online risk assessment, and this is very, very important, because if your bonds are have maturity of 10 years or 20 years, this will become very crucial. So in our case, it's just 0.5. Duration, yeah. But if duration will be 20 years, the deviation in price of percentage movement, 100 basis points, might be 20-30%. It's huge, and it's crucial to understand it. So if you would like to bear this risk, or if you would like to be exposed to that risk, yeah. What I would like to share more with you is the following. So it's an example from CIS, and actually one of the biggest corporations of one of CIS countries actually was making very interesting deals. I know that pretty well, but I cannot share with you the name. But the example that they were doing in 2015. When markets had a disruption, is very spectacular, because let's suppose that you will stumble upon that in the European market, and if you know about such an examples, you can benefit from that. So let's suppose that you are a financial director of a big corporation, and you have credit lines in local currency, and you can withdraw all of them and get relatively cheap funding. What you can do actually is you can do the following: that you can swap it immediately into dollar or euro dollar or euro funding via cross-currency swaps, and then you can buy your own euro bonds. So this case is actually what does it mean? It means that if rates go substantially higher, so if markets are disrupted, and we can see now that in recent half a year or year, there are different examples where good bonds with good ratings in different countries in Eurozone may be exposed to such a risk. But in our case, we can turn this risk to opportunity. So basically, if we can get cheap funding from local markets, swap them in euro bonds, so we can finance this buying at relatively cheap financing. But then we can actually buy good ones, but with bigger maturity, with bigger yield to maturity. So in my case, it was like the funding itself in euro or dollars was 0 or 1.5%, but company bought back its own euro bonds at 6 or 9 per annum yield to maturity. So what does it mean? It means that if these bonds were as long as 4 years or 5 years, they immediately, after the rates gone back, and they eventually gone back, because if you buy your own euro bonds, you cannot not pay to yourself. Yes, it couldn't be the case. So they earned 20 or 30% of notional value. I mean, it's not just cheap dollar funding, but it's in reality arbitrage that can help you to earn huge amount of money. So for us, I mean, for investors, it again can be the case when you can you can benefit from several market instruments. One is Eurobond and one is cross-currency swap, and altogether they can bring good results. And this is real chart of this Eurobond, this particular Eurobond. So basically, this was the disruption, left-hand side, yes. And after the disruption, after market stabilized, companies started to buy back here their own Eurobonds. So, and it actually soothes the market. So basically, here they get cheap dollar and euro funding, invested it in 6 or 8 yield to maturity bonds, and of course when the rates get back to normal level, they just roll this deal back. So, and they earn huge pile of money actually. So, and if we will try to look at this example in more common way of how to apply it. So basically, we can get our screener, yes, and what we should look at, not just should look at the currencies we would like to have in our portfolio, but maybe we should look a little bit broader and then make cross-currency swaps into our functional currency, and then we can try to assess the eventual yield to maturity that will be nominated in our currency, yes. So, and how to do this actually? So I made together with actually with the help of my students, to be honest, very good Excel example of how to swap particular flow from one bond into another currency, in which in this case it's into dollars. So, and how it works, it basically works like in previous example, but we have long flow of money. We discount it at some particular rate, discount rate, yes, and we try to achieve the difference in flows to be zero, and that's how Excel tries to help us to understand the rate for one of the leg of the swap. And actually, of course, we need to give it some inputs. We need to give some estimation table basically for LIBOR, for discount rate in one currency, discount rate in another currency, and and that's it basically. And to the below of this Excel is actually we can make kind of sensitivity table that will help us to understand what will happen with our swap if the rates will go up and down. You see, and if we would like to look into FX risk also. So what I would like to say to you is that we can actually explore many opportunities on the market, and we shouldn't be looking directly into only currencies we would like to have in our portfolio, but we can look broader and try to swap those into the ones we would like to have. So regarding the outlook, let's have a look at the slides. So I mean, they are not requiring, to my mind, any particular thoughts behind. So that's expectations for long-term outlook basically is till second quarter of 2025 is shown. So what I mean to say is that it seems that after quarter one of 2024, rates should go down. To be honest, I'm not sure that will happen that fast, but that's what many market participants is showing to biggest vendors, I mean, in the world. So if we will look at the euro rate, yes, it's almost same story, but longer period of waiting till the rates go down. So I mean, they should go down, to my mind. And if we can look at another split of how people from federal funds think on where it's the rate will be, still you see that many participants think that in 2024 and 2025, 2026 and longer, the rates should go down. So at least they will start doing that in 2025 significantly. I mean, not just from slightly, yes, because we are somewhere here now, and this figure shows that maybe we'll go 0.5% lower. Who knows? But again, the expectations of 2025 not my thoughts, but ideas from the market. They show that rates should go down. For us, if we would like to to make some investments, I mean, it's so if the rates will show these dynamics or these dynamics, yeah, it means that that if we will have a portfolio of bonds, these bonds will be revalued to the to better prices, because if yields go down, the prices go up. So that's basically it. If you have any questions, and if you would like to for me to send to you Excel calculations, I will be happy to.
So I just wanted to discuss with you probably in order to make our seminars more complex. So what kind of your recommendations when our participants start to invest in bonds, or they are already active? So what are the crucial points they should take into consideration, especially as of now, the current trends? So Snezhana, what are your recommendations in terms of the analysis of the bond they would be picking? What kind of things are most crucial to verify at the very beginning?
Yes, well, I would start with the risk management strategy, because I believe that it's more important how not to lose money before you start earning money. So we are in a very volatile environment, and it's very hard to have our job is not to predict the market. We just need to see what the market is telling us, so we can identify the trend and just to be part of that trend. So I would avoid any estimation or projections or suggestions where the market can go, because this is not our job. Our job is to see what the market is telling us and to react accordingly what the market is telling us. So we have downside targets on the short and medium term on the government bonds, and unless we see a change that the trend is again moving in the bullish territory, meaning to see the early signals on the hourly and on the daily chart, I wouldn't suggest anybody to open a long position on the long position and to buy bonds, because the prices can go even lower. So it's just we will have to need to see what the charts are telling us before making any decisions, and to have proper risk management strategy.
Thank you very much. How long does it take to understand and master the technical analysis? How do you provide this support?
I'm sorry?
I want to know more about the technical analysis. How much time it will take me to understand it?
Well, it depends on the time dedicated for it. It takes time. I mean, there is no like a golden formula that you can learn. I mean, when I speak about technical analysis, it's a profession. It's not about just learning a particular strategy, how you can employ it and be successful in the market. So I think it takes time to learn and to learn your eye, to watch the charts and to get used to it, to know, to make to easily know what to see on the charts, how to identify the trends and everything. So depends on the time that anybody is willing to dedicate to spend for analyzing and learning all the technical tools that are out there. But it's it's not any particular. I cannot say it can take you 2 or 5 years because it's ongoing and learning process. I am still learning and implementing new ideas about technical analysis. So it's like a lifetime. For me, it's like a lifetime learning process.
Snezhana, I just wanted to have my personal question before we ask Alexey also. So as you probably noticed, I found like 2 bonds with the big duration, like Austria, for example, 2,100 and something. years. So they were traded like 130, and now they are traded around 40. So what do you think about how risky to buy such sovereign bonds? You mentioned also that. I mean, the difference between long-term, mid-term bonds, it's more or less clear for us. Like 10 years, it's pretty normal story. But when you are considering bonds with a super long duration, what do you think? Should we be careful with that, or we need to catch the moment and buy them while?
Well, I couldn't say without seeing the chart, to be honest, because like for our technician, everything is on the chart and in the price. I couldn't say anything because like we were in a long period in a quantitative easing period and with low rates, and nobody didn't expect that this could happen, right? So we cannot. So from this point, we cannot assume what will happen next in the next coming months or years. I mean, rates can go even more higher, or maybe something will break and the rates will go to the previous levels. But unless we see the charts and what the market is telling us, we cannot make analysis and make any kind of adjustments or statements.
Thank you so much. Alexey, maybe you could also comment what kind of things are the most crucial in terms of your risk analysis approach, especially now. What do you suggest to consider at the very first part, and maybe some currencies that you suggest, because it was pretty interesting how you can basically think about maybe some other currencies, but then you can convert to your currency, for example, euro, and then adjust the yield according to your strategy.
Yeah, that's one of the points. So my suggestion is to look wider at first, because again, so I mean, there are many ideas on the market, and the main thing to point them out is to look broader, and that's exactly the point. So you can look to other countries' bonds, other currencies' bonds, and you can easily use on top of the euro bond. You can use cross-currency swap to bring the yield you will receive to your currency you would like to. Yes, and that's so you and because in my examples shown, I mean, so the company was operating in one country, but in reality the currency of the eurobonds was different, and the funding was done, initial funding was done in one country, but it was invested into eurobonds that was denominated in another currency. So what I mean to say, and the profits out of that was huge. So it was 25% of the notional amount. So I mean, that was big disruption in the market. That's true. But what I mean to say is that if you will just in normal times, if you will look at broader, you will pick up through the screeners, through those Excel calculations, the best ideas that will fit to you. And of course, you need to assess risks, like the assessment I shown to you as GV01 assessment, and you will easily understand if you think that rates might go down or might go up, what will happen with your portfolio. I mean, if you will tolerate it or not. That's the to my mind, crucial idea, how to look at the investments.
Yeah. Thank you very much, colleagues, for your time, and thank you all the participants for joining us today. I really hope that this seminar was pretty insightful for you in terms of conscious and well-weighted investment decisions. I would like to highlight that this year is really the bond year, and there are so many market opportunities that we already mentioned. So feel free to be bold. Feel free to find different investment ideas, not only in geographical space. I mean, but also try to think globally, but maybe within the currency you are interested in or the issuers you are interested in, but try to be very careful. And we have all the tools in order to make this process well and rationalized in terms of risk analysis. So thank you very much for your time. Thank you for your interest. We would be happy to share the presentations of our speakers afterwards, and feel free to contact them for detailed maybe discussion, so they could share their own views, how they analyze the market in the most professional way. They are experts in it. And thank you very much for joining Cbonds. Today we would be happy to offer you 1 week trial access so you could explore what are the market opportunities right now to study what are the bonds and basically monitor your portfolio. For now, thank you so much, and see you probably at our next event. I really hope it's not the last one, so probably it would be already in the next year, I hope, because well, it's already December. Who could really believe in it? All right, thank you so much, and wishing you a wonderful week ahead.